Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Always a pleasure to be on your show.
Hilliard, what's going on with real estate in Canada right now?
Well, as far as I can tell, there's a surge in single-family home demand, and prices have risen in that category as well. Everybody's looking for a place with some room and some dirt and a yard, and there's a slump, a major slump in the sales and the demand for condominium apartments. So people are fleeing, especially Toronto. They're fleeing the downtown area because, of course, a lot of them are working from home. And they're trying to move out into the suburbs where they can have a little space for themselves, and they no longer maybe have to commute as often as they did before. So it's having quite an impact. So, for instance, one thing that behind the headlines people may not realize is that the price index they use is an average of the recent sales. So if most of the sales are more expensive single-family homes, and there's very few sales of cheaper condominiums, the average price is going to rise because the mix has changed. Not necessarily because the prices have changed that much, but because the mix has changed. So it shows up as a resurgence in the price index, which had been in decline for 2 or 3 years, and I think it's going to fool a lot of people.
Yes, Ross Kay's also explained that. You know, it's an average of the prices. He said if you're buying more expensive homes, it looks like the average price has gone up. You're just buying a better home. And he said, in actual fact, house prices are down, but people are just buying more expensive homes. You're getting more quality.
Well, and the other thing that they don't mention in this thing, they mention it in the sense that they explain that they can't really adjust for it. If you read the background on their website, but there's two main sources: the CREA, Canadian Real Estate Association, and Terranet National Bank House Price Index, and they mentioned that they can't adjust for a couple of things. The first one, as you mentioned, Ross Kay has explained, the change in the mix. The second one, that's even more obscure but is important, is that when somebody goes and spends $100,000 or $200,000 after buying a teardown home, and then puts it up for resale, and the price jumps by $200,000 or $300,000. That's viewed as a increase in the value of the property, but really it was an investment in the property, which now is being offered for sale. So the actual home itself may not have increased in value. It's just the amount of money spent on the property has increased. And that is, I don't know why they can't adjust for that. There's things like building permits and all that, but the website explains that they're not able to adjust for that. So
maybe they just don't want to, because it's convenient to show potential customers, look, prices are up, so this is a reasonable price to pay, and of course their commission is based on the price of the house.
Yeah, and I think too that the steady flow of new buyers is really helped by the steadily rising prices, or the illusion of steadily rising prices. And we're doing a small renovation in our house because we need some more room because of Zoom calls and working from home. And we talked to some people and say, "Oh, are you getting ready to sell your house?" And I said, "No, we're staying here." And they said, "Well, a lot of people are doing these renovations to get their houses ready for sale." That's such a waste of money. It's like you're going to get the price for your house, and nobody's going to pay you for your renovation that you did. Even painting is a mistake because they might not like the color of the paint you use. So it's much better to sell a house as it is if that's what you're planning to do, rather than spend money in order to get it ready to sell. And any very experienced realtor, if you ask them, will tell you that. But people are, the number of renovations in our neighborhood going, I'll be interested to see which houses actually go up for sale after the renovation is completed.
You also said, I know it was kind of joking, that maybe bungalows aren't the best choice if you're a couple who work from home. Explain.
Well, so we have a couple of acquaintances that we have, and they want to get a two-story because it allows people to have an office in different parts of the house. So we have, in our household, there's just two of us, but we're both on Zoom calls, for me for my work, and my wife, she's teaching by Zoom. And it turns out in a bungalow, which was the hot product 10 years ago, is not ideal for that, because you can hear everything that the other person is saying in the call, and it kind of interferes. So that's why we're doing a small renovation, to get a room in the basement for me to go and do my Zoom calls in the basement, have a little office in the basement. And the two-story makes that easier, because you can have one upstairs and one downstairs, and it's quite a bit easier. So two stories were in at least in Edmonton, where I live, in the mature neighborhoods, they were very difficult to sell because people just didn't want two stories. Now, with working from home, two stories might make sense, because people could be upstairs in their office working, the kids could be down in the playroom playing, and somebody could be in the kitchen, and everybody could be happy. So it's a thought. I haven't done any research to confirm if that's happening or not, but certainly two stories are easier to adapt to in the work from home environment.
What's going to happen to all these downtown condos?
Well, apparently, now there's an article on Bloomberg just today, and I read it, and it said that all over the world, London, Manhattan, San Francisco, Toronto, they mentioned Toronto, put them up in the world-class area. I don't know if they mentioned Hong Kong, but all of those ones, there's a significant drop in the rental. And so we're talking about rents coming in, which, the cheapest rental probably in Manhattan or San Francisco, even for a very small apartment, used to be $3,000 a month, and now it's possible to get one for $2,000 a month. The average doesn't come down 33%, but there are cases like that. So the average, I think they mentioned, was 18% drop in rents. But in Toronto, the number of condos listed for rent is in the $10,000 range, and a 10,000 unit range, and the number of condos listed for sale is up in a similar category. Many thousands of condos for sale. And it's generally the smaller ones that are put up. So the smaller ones were very attractive to investors. I wrote in my book what a terrible investment condos are, but people went ahead anyway, and they were never making actually the full amount of money they needed. If they bought in the last 5 or 6 years, the price of condos was way too high for anybody to make money renting them out. But I think they felt that they could rent them out, and they could lose a little bit of money every month, but they'd make up when they went to sell the condo later on for a profit. Now the dream of selling the condo later on for a profit is disappearing. And so now they're just looking at the negative cash flow, and they can't find tenants, and they want out. So they're either aggressively dropping the rents in order to find a tenant, and there's a shortage of tenants now, because as we started out talking, people are fleeing downtown Toronto to go to the suburbs, and or they're trying to sell it. But in both cases, there really aren't that many people that want to buy a 500 square foot condo to live in. It's a temporary stepping stone into something better later on for younger people, but I suppose the long run solution might be to take two of them and knock out the wall in between and make them into one big 1,000 square foot unit. But we're a ways off from that now.
Also too, I mean, at least if you get into the equity market and prices even go down, if you've paid into your apartment for 4 or 5 years, you still should have some equity and get some money back, right?
Well, I don't know how that works. So people are taking 5% down, and they got a CMHC insurance fee, which is pretty hefty at 3%. So they're right off the bat, they're down $15,000 on a $500,000, plus the closing costs, plus the transfer fee in Toronto and all that. So they got all that to make up. And then if the price drops from $500,000 even down to $450,000, 5 years later, they're not going to have much equity in that, assuming they're using a 25-year amortization. So I don't think so. No, I think there's going to be trouble, and the negative cash flow is going to start looming very large for these people. But I'm not sure how they're going to be able to sell some of these condos. And of course, in the luxury end of the condos, it's a different thing. There's a building in Toronto, Shangri-La, it's called, and the Golden Mail did an expose on the several, $4 million units kind of range where they had sold for a loss a couple of years after they had been bought. But the suspicion there is it's just money laundering, and they don't care. They buy it for $4 million, they sell it for $3.5 million. They don't care. They lost $500,000, but now the money has been laundered and it's clean now because they can say, well, I got the money from selling my condo. And generally people don't look back 2 steps, they just look back 1 step. So they've accomplished their objective. They don't mind paying that entry fee. But it's going to be a nightmare. It really is, because there's over 100 towers, cranes actively working in Toronto right now. It's more cranes than the combined of New York, Chicago, and San Francisco combined. So there's a huge amount of new supply that is yet to hit the market in Toronto.
We'll have more with Hilliard MacBeth right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, Tesla has released their earnings. Have they made money yet?
Well, the Tesla, I haven't seen the Tesla earnings yet. They're coming out later today as we're speaking. But they're expected to be in the $3 or $4 range. And the problem is that the stock is trading at $400 and something, $430. So I checked one, research analyst, JP Morgan, a big U.S. investment firm, and they've got a target of $75 for Tesla, and it's currently trading over $400. So I've never seen a research report where the target was so much lower than the current price. But Tesla has gone from $100 or even below $100 in March up to over $400 just in the last 7 months. So at $75, the target that JP Morgan has for the stock, it would be trading at about 30 times earnings, $2.50 or $3 of earnings. So that was probably, the average for the stock market is about 20 times earnings, but Tesla's not an average stock, obviously. It's got lots of potential. It's got a leading position. It's got, 2 new factories under construction, and, it's going to be very hard to catch in the electric vehicle market, and electric vehicles, appear to be here to stay and will probably be the future. So, but that doesn't mean that people can buy the stock at $430 and be guaranteed to make money. It's possible to have, great industry, great company, great future prospects, excellent prospects for earnings growth, and you can still pay too much for a stock. So I think it's a good stock to own for the long term, but I think this particular point is a difficult time to enter. I kept some of my Tesla shares. I didn't sell all of them, but I sold some of them. And if it dips back down to $100, I'll add more.
General Motors has launched a $113,000 electric Hummer, and it has sold out in 10 minutes. And this thing here is pretty incredible. It has a ground clearance of 6 inches to handle deep water, rocks, or ruts. It can crab walk. In other words, the wheels turn inward, so you can easily park in parallel parking because big trucks are hard to park. Yeah,
I see them all the time struggling in parking lots. the reality of that is that they offered very few. They're talking a year from now to have the first model out, and it'll be a very expensive model, a limited edition model. The actual base model that they're talking about, the Hummer, won't be available to 2024. And they only, like Tesla, they only asked for $100 to secure an order. So I think what happened was they asked for orders. They took 1,000 orders or whatever, and then they shut it down because they won't be able to make more than just a very limited number by the end of next year. So we'll know in 2 or 3 years whether that's going to be a big hit. But one of these companies will emerge as a challenger to Tesla, and I don't know if it's going to be GM or Volkswagen or Toyota. All three of those companies I just mentioned, well, certainly, GM and Toyota both have had an electric related offering for many, many years. The Prius with Toyota and the Bolt and the Volt with GM, but they were never really serious about an all electric car until now. So we'll see what happens. Of course, they've got issues with charging networks and all kinds of challenges to overcome. And Tesla has such a big head start. But if 40 or 50% of the electric car market is going to be, of the total car market is going to be electric by 2040, we're talking 40 million vehicles a year or something like that. And obviously all of the manufacturers will have to be involved in that if they don't go bankrupt trying to make the transition.
And Hilliard, this electronic Hummer, 1,000 horsepower.
Well, how much does it weigh? It's going to need at least that much just to move. Unless they're rolling it downhill like the Nikola did.
The Nikola?
Nikola, yeah.
Yeah, now
GM has partnered with Nikola, and I think the chief CEO has been ousted, but I don't know exactly where that stands right now.
Well, a lot of people are saying Nikola's a scam, and of course, Tesla's first name was Nikola, so they're trying to, I think, tag along on Tesla's. Now, you've driven and owned a Tesla for quite some time. What's your impression of this rather expensive but nice car?
Yeah, it's coming up to, it'll be 5 years in just 3 months or so. And, I just bought another set of new tires. And, other than, tires, and adding windshield washer fluid, it's, basically, maintenance free, which is an amazing thing. And now I'm not a big user. We actually have 2 Teslas, and, the kilometers that we put on is, I don't even put 20,000 kilometers a year on, but I have been to Vancouver, I think, from Edmonton 4 times now, and it's easy to do. I love my car, and it's really nice not to have to worry about maintenance and things like that. When I bought 5 years ago, they were quite expensive. The prices keep dropping, and Tesla just put another price cut through a couple of days ago, and obviously the most of the new Teslas being sold are Model 3s, which are much cheaper than the Model S, the one I have. But they also announced they're going to come out with a new version of the Model S. They're going to call it the Plaid, which is even faster than the ludicrous mode. I think that's from a movie called Spaceballs, and those terms for speed. And so I might have to look at that one. It's about a year away, I think. But that one is going to be the amazing thing about that one, it's going to have, they quote the range in miles, so it's going to have 500 or 600 miles of range, or in other words, 1,000 kilometers, which means if your bladder could stand it, you could drive almost the whole way to Vancouver without stopping, which is, the way it works right now is you have to stop 3 or 4 times, between Edmonton and Vancouver.
We'll have more with Hilliard MacBeth right after this.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, any particular or unusual activity in the U.S. stock markets heading into their election in less than 2 weeks?
Well, the main thing that's happened in the last few months, other than the huge rally from the bottom in March, is that the what you call the clean tech stocks. There's 30 stocks in the S&P 500 index that are labeled as an index, clean energy index, a global index. It's up 80% year to date. The U.S. stock market's up about 5% right now year to date from January 1st. And the oil and gas index in Canada is down 40% year to date. So, now I don't know if that's because people are convinced that Biden is going to win, but certainly if Biden wins, a big part of his platform is a very aggressive move towards clean energy, talking not necessarily about subsidizing electric cars, but subsidizing a charging station network, although that's well built out already. And eliminating coal-fired energy, which is a huge task. And I don't think the time frame that he put on it was 2030, which is basically very soon going to be only 9 years. So that seems unlikely. But the floodgates will open for more encouragement of clean energy, and that may have an impact on the stock market. The other big things that Biden is doing. Proposing is an increase in the tax rate for people for income over 400,000, but it's a pretty small increase. It's only about 2.8% increase. So for those people lucky enough to make $1 million a year, the $600,000 above 400,000 that they earn will attract a little under 3% additional tax, which is about $18,000. Yeah, there's a lot of crying and screaming going on, but it's a pretty trivial amount for somebody making $1 million a year, and I don't think it'll have a big impact. The other thing is he's proposing to restore some of the corporate tax rate back up, but not the whole way back. So Trump made a huge cut in corporate taxes, and Biden is going to raise corporate taxes part way back up to where they were before Trump cut, but not all the way. So I think it's probably something that the stock market won't freak out, especially given that for a couple of months now, the polls have indicated that Biden is likely to win. The big change would be if the presidency changed, but also the Senate changed. So then it's quite unusual for the president to have both the Senate and the House of Representatives on his side in the same party. And that would allow him to do some stuff that, for example, President Obama was never able to do because he was always hindered by the control of the Senate in the Republican Party, and they were opposed to pretty much everything Obama suggested. So that would be a change. And the stock market, if the Senate goes Democrat, the stock market might get a little nervous about that, and you might see a sell-off after the vote.
Hilliard, thank you so much for chatting with us.
Nice to talk to you again.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethmcleodgroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.